Where does the Fed's tightening cycle leave Asia, especially emerging markets in our region and the regional representation of the Fragile Five? And I'm paying particular attention to India and Indonesia.
Yeah, I think the Fragile Five is something we probably don't have to be as concerned about this time around. When we looked at this last year to think about which countries might be the most vulnerable, it's really the smaller frontier markets as opposed to the larger markets. The current account positions are very different. Those imbalances are really a frontier thing this time around. So not that they're not important, they're just not as large and won't move markets the same way. So I think more generally in Asia, the concern is that the recovery here is lagging other regions. So it wasn't the region that was worst hit by COVID, but it is lingering and the economic impacts are lingering. So I think that recovery story is a little bit behind what we're seeing in most of the other emerging market regions.
Understood. If I could just press you a little bit, James, the exact frontier markets that are particularly vulnerable to a higher rates environment are Sri Lanka and Pakistan. Am I correct? Are there others?
Absolutely. Yeah, absolutely. Those are the ones that have financing needs. I mean, Sri Lanka is in a little bit of a difficult position right now. We've got them at double C, which is pretty close to being a default story. Pakistan has very large external funding needs as well. So those would be the two in the region. Laos is another one which is vulnerable, which is also in the sort of triple C category. So some stress is there. So you've identified the right ones.
James, good to see you and good morning, and hope you're continuing to keep safe. So other than those three fellows, the rest of Asia should be doing pretty all right. And it also helps that you're only looking for, and I want to push you on this, 2 hikes from the Fed this year, right? We can get into why and what your expectations are about inflation, et cetera. But what I want to know is, look, we were talking to a guest earlier on, one of our first guests this morning, who said, look, probably 5 hikes because they're that far behind the curve. You're at 2, the market's at 4. Why are we all over the place on this when, I mean, look, we're all smart people, right? But, I mean, the views are just so divergent. Why?
It's difficult to forecast. Look, we take a look at what the communication of the Fed is. I think, maybe 5 is what the Fed should do, but, we're trying to forecast what they will do. And our expectation is that they're going to be careful about this. Ultimately, we're going to get, we think, to the end of next year at a Fed funds rate at 1.75. The pace of how we get there, it's not super critical. So whether that's 2 this year and more next year, or more this year and fewer next year, we don't think that's really that important given the level of interest rates. So I think there's room for debate in terms of the pace, but we think that the Fed will be maybe guided by what happens in Omicron and the economic setback that might come from that. So 2, 3, 4, all possible this year.